I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA-SIPC. Position disclosure here, nothing has changed on my swing trades. Just did a lot of position management today. Sized up some positions, sized down some positions. That was really my big focus, as I kind of discussed in the morning meeting today. All right, so before we kind of jump into the market ourselves and our normal stuff, just, I guess, a couple housekeeping things. So, you know, I've been open-minded to doing things differently now compared to how I've always done it. And that is, I think, a big benefit to a lot of our guests who are here. For a long time, I really didn't want to work with anyone who wasn't in a professional account. And I've changed my thought process. And part of that was because we've done a couple of these open houses. They've done well. It's always been very important to me to keep the ProDesk virtual trading floor as professional as possible. That like it doesn't have to be professional traders. I just want a room where professionalism is the focus, and I don't want anyone to mistake professionalism with being a beginner. You can be a beginner and still be professional. So anyway, I'm reading. The reason I'm speaking slowly is because I'm reading what you guys are saying here in the VTF. It should be showing a chart right now of the SPYs. I was having some weird issues with the VTF when I was first putting it on. Okay, it's good. All right, cool. So anyway, just to repeat myself because I got a little bit distracted. It's always been really important to me to have an environment of professionalism. That's what I care most about. And I don't want to work with anyone who is not professional. I don't want to work with anybody who is going to come in here and rag on other people, or who's going to discourage anyone from putting ideas out or whatever it is. It's an open forum for communication. It makes all of us better traders. I am not a perfect trader. I am wrong all the time on trades that I make. Net. Things usually tend to work out for me. But I am yet to meet the perfect trader. But if we're all supplying information into this virtual trading floor, we're all communicating with each other, we're all asking the right questions, it makes everyone better. And again, professionalism doesn't mean that you're necessarily a 20-year veteran of trading, even though we've got guys who are 20-year veterans who are part of the team. It just means that you have an aspect of professionalism in your manners and in your approach, and if you're asking beginner questions, that's just fine. And because I've always really wanted to keep my team and this environment really professional, I for a long time didn't really have any interest in opening up this virtual trading floor to the public. But because the last couple of open houses have gone so well, I'm open to changing that. One thing that I don't want to change is that I do still want either myself directly or a direct member of my team, Pat, Colin, Josh, to have a personal relationship with every single person who is here. So if you do become a VTF subscriber, which we're open to now, you're probably still going to get a call at some point from one of us just to have a basic conversation to get to know you a little bit better. And obviously the trader counselors here over with T3 Live, Caroline, Amber, Ashley, Monica, all those folks are fantastic as well. But you're still going to hear someone directly from my team also that I work with, just to have a chat so we can get to know you a little bit better. But anyway, the difference now is that you don't have to be a professional trader with T3 Trading Group to be trading with professionals. So we're opening this up more to people who want to be subscribers. So don't be afraid to reach out to Caroline, Amber, Ashley, Monica, whoever, over at T3 Live about getting a subscription if you just want to be part of an environment that is professional, where we're communicating ideas and we're all working to make each other better. So definitely reach out to those folks and inquire about how you can become a member of the Pro Desk. It's called the Pro Desk for a reason. It's because we are maintaining a professional environment in here. We're getting ideas in there, and our goal is not to have a get-rich-quick scheme or anything like that. You know, we want to build knowledge that can create wealth and create success. That is the goal here. So anyway, like Caroline just said, special offer, all that great stuff. So reach out to them, and you can also consider becoming a professional trader at T3 Trading Group by reaching out to info@t3trading.com. But a great place to start is by just becoming a subscriber for ProDesk. So do that. Also, make sure you subscribe to Derrick the Trader on YouTube, because I'm trying to get that going, and the @ProDesk VTF on Twitter. All right, so all that aside, let's get into today's meeting so we can do our learning. So how did the market do today? Market's trading down. Is market down almost $1 from where we closed after hours? We closed like flat. And now we're maybe down really small. And now it's only 420 and we're down 0.3%. I don't like the fact that we closed flat. If anything, I think that that's actually a bearish signal. We shoulda, in air quotes, shoulda, because we all know there's no shouldas in trading. We shoulda been able to close in the green today and have a little bit better of a bounce, considering the degree of downside extension, yesterday's candle, the sentiment indicators, a lot of the stuff that we spoke about in the morning meeting, but we didn't. Look at that. SPY's closing flat to negative. Q's here closed, I think, very small in the green, but they're also down $1 from where we closed. So Q's are now off about 0.2%. And the IWM is currently trading flat. That had also closed a little bit better. So for some reason, maybe it's related to the FedEx earnings. The indices are trading down across the board over the course of these last 20 minutes since the market actually closed. But not a great day for the market. Our big picture game plan today was super on point. You know, I tried to chat about, I have written on this ugly piece of paper, these 8 big picture themes that I have for trading success. And theme number 4 I spoke about at one point, which is knowing what type of day it is, because what type of trading day it is really tells you how passive or aggressive you should be to the market. And look, I would love more than anything, when we're having this open house going on, we have all you great guests here on the virtual trading floor, I would love more than anything to be sitting here and kind of pounding the pavement and saying, guys, there's so much opportunity out there. You know, we got to come in, we got to buy this and we got to buy that and whatever else. But I'd be lying, and that's not how I roll. The market opened up in a spot today where the best thing to do is have a less is more approach, to be passive, to sit on your hands, to be really selective in what you're doing. And I know it doesn't create the most fun, exciting environment, but it's going to be the advice, I think, that is going to make you the most amount of money when things are right, and it's going to save you the most amount of money when things are wrong. And honestly, on a trading day like today, if you can eke out some gains for yourself by being really selective and being involved in the right stocks, that's awesome. That's ideal. That's what we're trying to do. But outside of that, capital preservation on a day like today is key. We discussed it yesterday afternoon and then rediscussed it this morning. We said in the afternoon meeting yesterday, one of the most difficult opens that we could get for today would be is if we get like just a decent little gap up. You know, we gap up 0.5% or something like that. Well, guess what? We gapped up 0.5%. We opened up in a really difficult spot. We were not high enough from where we opened at 9:30, in my opinion, to do any real aggressive shorting. But we didn't. We were up too high off of yesterday's low to do any aggressive buying. Well, if you're opening up in a spot where you can't short, you can't buy, what are you going to do? The answer is you're not going to do much. We got to try to focus in those scenarios, and those scenarios happen fairly often. We always want to focus on individual stocks that can be in play, that can trade independently to the market. And that's why, by the way, the Wall Street bets thing and the short squeezes and everything that's been going on has been so awesome, because in the summer trading, you know, when some of these days, these ranges were super tight, and there also wasn't too much going on because the ranges were super tight. We were almost every single day as a team able to identify the right stocks to really trade that are going to be giving the short squeeze, the big range, or what have you. So even though I thought that the summer was pretty tricky trading, and now we're in this little bit of a sell-off, we were overall able to do a pretty good job navigating through it and finding the right stocks. But on a day like today, that's got to be the big picture game plan. Less is more. And you can just see here at this opening price action, right? First 5-minute candle is negative. We pull back a little bit because we're in the gap. Then we try to be strong, but if anything, it's just a little bit of a fake out. We get above yesterday's high, but we're still nowhere near like that 440 area where I would consider starting to do some real short selling. And then with just like one 5-minute green bar, that thing fails. Next thing you know, you're breaking new lows. Is that going to lead to a full gap fill? Yeah, it sure does. Filled that common gap that was here. Are we going to get a bounce off the gap fill? No, we traded a little bit lower, but we're also probably not going to break yesterday's low because we're too extended down to be able to trade all the way back down to yesterday's low. That's what we spoke about. So am I expecting any follow through to the downside here? No. Honestly, even though it wasn't a huge trade, shorting VXX right as the SPY's bottom today turned out to be one of my best trades of the day. And then we caught this little bit of a bounce back. And then once again, even in this bounce back, I think I even mentioned intraday, we had this strong green Maribozu that did not have confirming volume, about 5 sideways bars here, but the ADMA caught up to those. It's like, all right, maybe this ADMA can apply some pressure where we can work our way up. I would love to see this market maybe grind back up to 440. That would be decently bullish, and it would settle some of our oversold conditions in this current market. Is that what happens? Nope. Next thing you know, just choppy, right? This is so choppy. Off that low, lower high, chop back down, chop back up. Then things are starting to maybe look a little bit bullish here again. And then we sell off the last 15 minutes of the day, kind of close weak. And now we've sold off like another $1 after hours. I'm presuming that the FedEx earnings were garbage, right? FedEx is down 3%. It's actually not terrible. And that's why the big picture game plan this morning was less is more. You know, we're not opening up in an area where we have a big advantage, and it is what it is. And again, I would love to be here and rah, like so much opportunity, but if it's not true, I don't want guys or gals losing money when the opportunity is not there. So we got to sit on our hands. You know, nothing really different to report in the Qs, nothing really different to report in the IWM. I guess we should take a look at the big picture charts. IWM chart's still really sloppy. Q chart here is still extended to the downside. But like I said, this digestion day in the Qs and this digestion day that we had in the SPYs are more bearish than bullish. The more time we spend down here, the more likely we are going to be to break yesterday's low. And if we break yesterday's low, then this market is looking like it's in trouble. So that's kind of our big picture technicals. As far as individual names go, you know, a few things that were kind of on our radar where there was a lot of chatter. One was this DKNG. I remember saying this DKNG, we should not be looking to come in and buy this today. I think maybe some of you guys even looked at this to the short side. I didn't trade it at all. If it gets down to closer to like $50, I know Felipe was saying 48. I see the level here at 48. But closer to that area, 48, $50, I might consider coming in and trading it, especially if you can get down there quickly because it'll be extremely extended. But DKNG sold off heavily on some news. There was actually a decent long trade here that I know a few of you guys were involved in at 11:55 when the news got posted that they might not be doing the deal. And I mentioned you could come in and buy 53.80 with a stop loss at 53.39. So, you know, 40 cents worth of risk. Caught a nice little pop on that. Gave people the opportunity to raise their stop. We talked about a raised stop to 54.25, which then you would have gotten stopped out. So hopefully that turns out to be a little bit of a positive trade. Again, this is really important. So you have a trade that just, you buy it, it works perfectly. Awesome. You still have to be able to be good enough to have a game plan where you maximize your reward and then follow it. You have a trade that you buy it and it just straight fails. All right, it stinks, but you got to still have a game plan for risk management and you got to be able to follow it, and it's okay. It's actually, I think, a lot of what makes a difference at the end of the month is all the in-between stuff. Not the trade that worked perfectly, not the trade that you just bought and failed. It's all the in-between, like plug today, like this DKNG trade today. The way you executed this DKNG, if you took it, making sure that you get the right price, that you were early, that you weren't chasing it late, that you have that stop loss in, that you understand how trailing stops work properly, which again we get into in my training program classes. If you followed all that stuff, if you had decent execution and you implemented a trailing stop system, this is a failed trade. It eventually comes back down to lows on the day. You make money in it. Plug. This was another idea. This was one of my ideas from the morning meeting. I had this idea. I liked the daily technicals. I wished that there was a catalyst, but there was no catalyst. But I liked the relative strength yesterday. Even though it was an inside day, I thought it was decently relatively strong compared to what the market did. I liked the candle from the day before, kind of a breakout candle on some volume, positive Maribozu. And I thought that maybe an inside day and up, we could squeeze this thing, especially with a little bit of market help, to break the $27 resistance, and then that would be a solid move for it. Opening trade here is really through 26, through yesterday's high. So you come in and you got to take 20 cents risk on this trade. And the stock gives you a move up to 26.47. And then the trade fails. By 10 o'clock, it makes a new low. You should be getting stopped out at your original stop loss. And you should be, at a minimum, flat, donut on the trade. If you bought plug today in this opening move and you lost money on it, it means that you either have flawed execution or flawed game plan. One or the other. Or maybe if you tried a different trade, I'm talking about the 26 break of the inside day. Maybe some guys were looking at this inside and up. If you took the inside and up, that just straight failed. And fine, you lose your risk on it. I'm really more talking about the initial opening drive trade here through 26. So if you bought 26 and you got 20 cents worth of risk and you couldn't get your risk covered in a 50-cent move that gives you more than 2x your risk, you have a bad game plan. If you were meant to buy this, meaning to buy 26, but you didn't buy till 26.20, so you took on 40 cents worth of risk instead of 20 cents worth of risk, and as a result, you couldn't book any, take any off, so that you're actually taking a loss at the end of this trade. That's bad execution. So the only way that you could have lost money on this as an opening drive trade is either because you have a bad game plan or bad execution. This was one of my ideas for the day. I got caught managing some of my swing positions, did not type plug up right away. By the time I typed it up, it was like 26.18. Guess what? I really liked it. I didn't buy it. Why didn't I buy it? Because I missed my entry. And there's a big difference between taking 20 cents risk in this $26 stock, even though it looks great here off the open, and taking 40 cents risk on it. I'm not taking 40 cents risk on it. That would have been bad execution. Had I bought with bad execution, I would have taken just a straight loss on it because it would not have given me enough of a move to get my risk covered. So a lot of it is all the in-between stuff, right? It's all the trades that fail but gave you a move before they failed, which is probably a majority of them that make a really big difference at the end. So you got to make sure that you have a good game plan. Watch my game planning class in the training program. And you also have to make sure that you're able to have good execution. Good execution is difficult. It's something that comes with time in trading. But basically, you need to know your trigger price. Like, what is the actual trigger price that creates the catalyst for the trade? And you need to make sure that you're able to get that price or reasonably close to it for the risk that you're having to put on. And not chasing it, 20 cents late because you were looking at something else or whatever and you missed it. Which happens all the time, by the way, right? Like, I wanted to be involved in this plug through 26. I'm managing it's only 15 swings. A lot of times I'm in up to 25 swings. But I'm in 15 swing positions right now. And I had to manage some of them off the open. I missed my entry. One of the things I like to half joke about is I like to say they're not Pokemon. You can't catch them all, right? It's impossible to catch every single trade, even if you did game plan it. So execution is just going to be really important. So it's DKNG, that's plug. Those were on our radar. My frustration of the day was this QS. I had a really big bid at $20.51. Sorry, $22.51. The low of the day today is $22.51. I got filled 0 shares. It went down. I must have ticked 100 shares down at that $22.51. That 100 share was not mine. none of my shares on that really big bid got filled, and then it gave a fantastic rally, eventually going all the way to 24.60. And I know myself well enough to know that I would have caught that entire move. It would have been a solid $2 move. I wouldn't have caught it on my entire position, but I would have caught it for at least a good percentage of my position by the end. So that could have been a one. Coulda, woulda, shoulda. All the things you're not supposed to say about trading. Coulda, woulda, shoulda made me a lot of money, but unfortunately I did not get the fill by literally a penny. My bid price was so perfect that I got no stock. I was giving it to $22 as a stop loss. I didn't want to pay up too much, and it was a sizable bid. And I was planning on, and had a game plan where I was adding into the 20s and 30s. So I didn't want to pay up too much. And really, it was really two mistakes. Well, I guess it was really one mistake and one bad luck. The mistake was not buying it through 22 pre-market when the news was announced and Felipe was talking about the buyer he saw coming in on the tape at $22. Not getting filled the bid when I'm bid at the absolute low, that's just bad luck. It just is what it is. I don't like to ever attribute anything in trading to luck, but there is always a degree of luck. And not getting the fill to the penny that's just unfortunate. That would have paid me really well. But some of you guys, I think, were able to sneak into this QS and made a few bucks in it. This was one of the better trades of the day, so very nice. I know some of you guys made money in this life as well today. Also really solid. I saw that initiation. So I saw that initiation by Citigroup with the price target of $17 pre-market. That's a big initiation, and I don't normally care what analysts have to say because they're jokers. I was a little bit concerned about the degree of extension, but we spoke about it in the morning meeting as a potential buy around the 1050 area. So that one also worked really well. Trying to think if there's anything else really. UPST. There's a lot of chatter on this. I'm glad no one got hurt short. I'm glad no one was trying to fight this on the way up. It's not what we want to do, right? When we see high degrees of upside extension and things getting ridiculous, it doesn't mean just come in and press a short button. You really need to see a technical signal that tells you that you can actually come in and short. And we really didn't see that in this UPST until maybe into this area where I know some guys are starting to look at it, maybe. And even then it was difficult. You never really saw that heavy extension with the heavy volume followed by a shooting star candle that gives you kind of a bigger signal. So not the easiest trade in the world by any means. This move's getting ridiculous. But you know what? I always love to point to this JKS. This is the ultimate momentum, right? And this is why you can never think, okay, a stock is up too much, so I should short it. Look at what this JKS did back here. Is this 2020 now? Man, time flies. Yeah, 2020. So stock here in early September is like, whatever, 1850. Catches this really big breakout through like 23 bucks. It gives beautiful extension move up to $33. You're looking at this thing like, oh my God, this stock just went from 19 to 33 in a couple of weeks. It's up so much. I better short it. And the next thing you know, it just goes straight up to 48.50. And you probably blew up your account. And if you didn't blow up your account, maybe here you're like, oh wow, this thing is incredible. It just went from $19 to $48.50. It can't keep going. I better short it. And next thing you know, like 3 days later, it's at 63. And next thing you know, like 5 days later, it's at 90. You can't survive that. This is why we don't just blindly short stuff. You got to really wait for the signal. And honestly, there was a signal. I remember we were looking at this short up here. I don't think I wanted to be involved in that either. Almost on principle more than anything else. So you just want to remember that when you're looking at like this UPST. You can capture these moves, but you got to wait for the signal. You know, I remember we were able to capture this AMD recently into this also crazy degree of extension. I think a handful of us literally shorted 122 that day. High of the day is 122.50. So that was a solid little multi-day trade. But look, guys, counter trend trading, let me just tell you. Even if you do catch an AMD like that, or you do catch UPST, counter trend, counter momentum trading is not a great game. You can make money doing it, but it's hard trading. It is not stress-free trading. Would you rather be, and obviously this is with the gift of hindsight, would you rather be long UPST from $220 or trying to short it today at $320? It's such a better trade to be long from, even if you catch the top perfectly and you get a pullback, it's so much of a better trade to be long from 220 from that, you know, this ascending triangle breakout than it is to try to be shorting 320. Being with the trend, with the momentum, is generally so much easier, so much more profitable than trying to be against it. And the thing about being with the trend is that it really makes your reward unlimited. What's your reward potential on the downside? Best case scenario, you short this UPST perfectly, you catch a move to 260, that's a beautiful trade. It's still not as easy or as potentially profitable as being long. So again, I'm not saying don't take the trade. I'm looking at those for trades myself. I do take those trades sometimes, like I did with AMD. I was considering hitting the short button on a couple occasions here on UPST. I just never actually pulled the trigger on it because I'm very, very selective with those types of trades. And I'm not saying don't do it. I'm just saying, guys, the easier money is just being with the movement, with the trend, with the momentum, not fighting it. That's pretty much that. The only other thing that I really wanted to speak about today, and then I'll get to questions. The only other thing I really wanted to speak about today was tomorrow's Fed meeting. So tomorrow we have the Fed meeting. So let's just go over what that usually means and what we can potentially expect. So tomorrow morning will be the normal price action. Normal opening price action off the open, that first half hour, 45 minutes of the day, the price discovery period of the market. You can trade that the same way that you basically always trade. But then typically, and you never know, every day is different, there could be new news events or whatever, but typically the market gets very slow, difficult, and choppy, starting at somewhere between 10 and 10:30 a.m. Eastern, all the way up until 2 o'clock when the announcement happens. Usually you really, really don't want to be doing much trading between 10:30 and 2 on Fed days. It's a great way to just chop yourself up. And 2 o'clock, there's always price action. The degree of that price action highly depends upon what's said. I'll talk about that in a second. But there's always at least some volatility that comes into the market at 2 o'clock. Volatility breeds opportunity. So you don't want to, be past your maximum loss because you are trading heavily at 11:30 on a Fed day, and then all this great opportunity comes around at 2 o'clock and you can't participate in it. So that's usually what happens on Fed days, and honestly sometimes even the day before a Fed day is usually a little bit slow and tricky, which did happen today as well. I don't really attribute that to the Fed so much today as I do to where we gapped. So then 2 o'clock comes around, and they're going to say a bunch of stuff, right? First, there's just like a big release of data from the FOMC, and then at 2:30 typically is a press conference with Uncle Powell. And Uncle Jerome has done a great job recently of perfectly navigating this fine line of saying just the right things to really not spook the market. We'll see if he's able to continue that. I haven't done all of my research yet on expectations for tomorrow. I usually do my research on that type of stuff in the morning, so hopefully I have a little bit more for you guys in the morning meeting. But here's the big thing, because I don't exactly know what the expectations are tomorrow on what he is expected to say on timing of tapering. The market moves more on surprises to the expectation than anything else. Like, if the expectation is a bearish outcome and that bearish outcome is perfectly met, the market doesn't necessarily go down because it's already been priced in. If the expectation is a bullish outcome, that he's supposed to say something bullish, and he says exactly what he's supposed to say, which is that bullish thing, the market doesn't necessarily go up because it just perfectly met the expectation. Where the big moves come in is when there is a surprise to expectation. Like, for example, and again, still got to do my research in the morning, but for example, if the consensus is that he is supposed to announce tapering starting in October, and he instead says, you know what, we're not doing any tapering for all of 2021 because of lack of inflation or China or the jobs or the recovery is not going fast enough, so we are going to be postponing our tapering, and that's a surprise to the market's going to have a big reaction. The opposite's true also. If there's an expectation that tapering is supposed to start at a certain pace or something like that, and he speeds up the timeline, that's also going to be a surprise. The market will move bigger on the surprise than just the meeting of expectation. And it's really the degree, it's not the degree of bullishness or bearishness of the announcement so much as it is the degree of the bullishness or bearishness of the surprise. Like if he's supposed to say something bullish and then it's more neutral, well, that gets treated. Or if he's supposed to say something bullish, like very bullish, and it's only a little bit bullish, that's bearish. Does that make sense? So it's the surprise factor. So I got to do my research in the morning to see kind of exactly what the expectations are. He's going to talk about the Fed dot plot. He's probably going to reiterate that the Fed is not going to begin to raise interest rates until tapering is fully complete. The tapering is probably going to be like at least a year process, so they're still going to be doing Fed purchases. They're just going to taper them off, right? They're going to slow them down over time, and we want to see exactly what he says on the expectation of that starting. And then we also need to pay attention to how the TLT is going to move. So it's going to move the TLT, right? That's the first thing I look at just to get an idea of what interest rates are doing. And obviously bonds have an inverse correlation to interest rates. So if the TLT is moving higher, that means that interest rates are moving down. Interest rates moving down tends to be best for tech, best for Qs, worst for IWM, worser for value, worser for XLF. Is worser even a word? I don't know. If the TLT is moving down and interest rates are moving up, that tends to be better for banks, a little bit better for the IWM, not as good for tech. So that's kind of the play there on relative strength and relative weakness. Sometimes you see a complete inverse move between what the SPYs do and what the financials do on those Fed days. So again, I'm going to probably do my exact research on what the expectations are tomorrow morning for what should be said for the Fed at 2 o'clock, and then I'll have a better understanding of exactly what he's saying and how it's going to move the market. But one thing that we can expect for sure is volatility at 2 o'clock tomorrow, and probably a slower day up until that point. There's a lot of other catalysts out there, right? China coming back online. I think the Chinese holiday is over. What Chinese holiday is it, by the way? I'm not really sure which holiday it is over there. Yeah, I don't know. So there's obviously other catalysts out there for price action, but we'll see. The Moon Festival. Cool. Is that the one where you get the little cake things? Those little moon cakes? No. Somebody send some moon cakes. I'm at 1 State Street Plaza on the 10th floor. Those are delicious. All right, that's all I got for you guys. I am going to go back up to the VTF here and scroll through and see what questions you guys got. I feel like I saw Tian Hao sneak in a question very early. There it is. I'm going to start with Tian Hao here at 411. What do you think of Disney holding above major support? Yeah, so someone asked about that in the VTF earlier today. This 170 area is big support on Disney. It's been a really big consolidation for a while. Disney's been a very difficult stock to trade. I'm not exactly sure what the news was. There was some sort of news that came out. Mickey Mouse did something he shouldn't have. That sunk the stock down. It held it today, but I really don't have an opinion on it. I don't really have an interest in going long off this thing. This stock just has not been able to break out. There's a couple of stocks in theory that I always want to be long, and in practice I find are very difficult to trade. Disney's one of them. Walmart, which I am long, is another one of them. I've been swinging this Walmart small for a long time, and it's paid me pretty well. But Walmart's another one that in theory I always want to be long, and I find it really difficult to trade. So yeah, Disney 170 definitely support. So you could try to be long off 170 or off today's low. It's probably going to be one that I avoid, especially without knowing exactly what the news was. Next here from John, Stitch Fix. Ooh, nice move here in Stitch Fix. Is that after hours? Or is it during the day today? Stitch Fix is up 11.5%. It's all after hours. I don't know what I missed here after hours. So I was doing the meeting for you guys. Oh, it's earnings? Nice. I'll take a look at the earnings later. Good stuff. Maybe we can have this Stitch Fix on the radar for tomorrow. Question about LCID. Having missed the entry at the open, what would you consider to be good setups, if any? Let's say up to 11 a.m. or so. How about the inside bar and up at 9:40 or through 25:41? Sure. So the thing about Lucid is I think you need to be long from yesterday. That's really the first thing I'm going to say. Yesterday was the relative strength. Yesterday is when it wasn't extended. Yesterday is when there was a better daily setup. Yesterday is when we saw the option flow. Today gave great continuation, but it's very difficult for me to be long a stock at $25 when we had the opportunity to buy it at 22 yesterday and the ADMA is still at 22. You're buying a $25 stock that's extended from the ADMA by $3. Again, we just looked at JKS. We know extended stocks can keep going, especially when can an extended stock become more extended when there's volume or there's news. Well, I don't think we had news, but we had volume and we had option flow. So beautiful volume in this LCID enabled the momentum to continue. So I'm probably not buying this today, but $25 is a little bit of a daily level. So you could have bought this at $25 versus lows because of this pivot high here back on August 10th. So that's one setup. This inside 5 here is so difficult. This is so difficult for me to execute it because it's even extended on the 5-minute chart. You know, an inside 5 is a rest bar and it's momentum continuation. So when do you want to trade inside 5s? You want to trade inside bars as execution strategies when you like other things. Basically, you want to trade inside candles as an execution strategy during periods of momentum or trend. And that's exactly what you have here. You have an inside 5 in a period of momentum. So this is very executable. You could have bought this through the break of the inside 5 versus lows. I still find that difficult because of the degree of extension on the 5-minute chart itself. Outside of that, maybe versus this pivot, but not really seeing too much else here to bite onto outside of those opening drive type trades. Scrolling down here, guys have good jokes. Derrick, do you look at my picks? They did well today. I looked at them at real time, Bob. You're going to have to remind me, though, exactly which ones. I appreciate the communication. Keep it up. I was happy to take a look at, whatever names that you're focused on as you call them out. And I know that you were focused on the right names today that were in play. And that's exactly what you needed to do today. You needed to be focused on the names that were in play. That ATER, was that you that brought this ATER up also? ATER was another one that had great, consistent opening volume here and was strong. And look, volume dies out and then it does nothing, right? It's not a coincidence. FedEx crushed. China reopens after the holiday. Oh, it's the whole week? Is China... Man, the Chinese market is sick. I like how they give that much vacation time. Seems like the Chinese market is always closed. The Lunar New Year is a full week, right? The Moon Festival. There's a rule, I don't know if you guys are aware of this, for U.S. markets where they cannot be closed more than 2 days in a row. That's why the day after Thanksgiving is a half day. That's why, what is it, Christmas Eve, I think, is also a half day. Is it Christmas Eve? I don't know. But that's for sure why the day after Thanksgiving is a half day. It's because the market's not allowed to be closed. Some old school rule for 2 days in a row. And did you know that the U.S. stock market used to be open on Saturdays as well? Every Saturday used to be a half day for the market. I'm kind of glad that they got rid of that. Next here from Hope. Would be appreciative if you can explain your strategies, your main go-to strategy entries for long or short, how you set up for these methods, approach on options. I don't trade options. These are what would help understand how you attain consistent trading gains. Sure. So I have a lot of trading strategies that I implement, not just like one specific trade. And a lot of what I focus on is dependent on the market environment. So different market environments have better, there's a constant rotation of types of trades that pay better in different market environments. So you as a trader have to be very adaptable to whatever the new normal of the market is. Like the trades that I used to use back in like 2010, 11, that paid me with pretty good consistency, I don't even teach them anymore. They don't work. I had to completely reinvent myself, and the market is constantly changing over time. But one of my go-tos for a long time, and now that the market's pulled back, maybe that's not going to be there, has just been the simple daily breakout trade. And again, I go over that trade in the first class of my training program, which is the Intro to Technical Analysis class. But it's a simple buy in the daily breakout using the ignition bar low as the stop out. I think that's like a great starter trade for new traders who are beginning. I think it's a trade that can provide consistent profitability, and it's a fantastic one. But there's a lot more that I'm focused on than just that. There's chart patterns. There is the breakout trade. There's buying off support. There's shorting off resistance. There's the hammer capitulation buy setup. There's time frame continuity. There's utilizing inside bars, like I was just saying, as execution strategies when you like other things. I have a whole class also on the inside bar execution strategy in my training program. A lot of it, though, really is not just the actual trade itself, it's all the other things. The trades themselves, for the most part, execution's a skill. But the trades themselves, for the most part, are really not too difficult to learn. It's knowing when to implement them, knowing how much risk to take, knowing when to go heavy and not to go heavy. That's what's a lot more difficult. Those are all those layers of probability that I'm constantly talking about. Layers of probability are a dynamic thing, because there's so many things that can affect a trade at any given point in time. And guess what? I also have a long class on probability. We're getting into all the details and layers of probability, and that's probably one of my most important classes. So that would be it. I think a great initial starting trade, though, is just the breakout trade. Daily breakouts, 5-minute ignition bar low is your stop, maybe 15-minute ignition bar low is your stop. I don't trade options, so I'm primarily a directional trader, and I trade in a professional account. So I think if I was in a retail account, I probably would trade options. The reason to trade options in a retail account, unless you're doing spread trading, you're trading spreads or calendars or whatever, the reason to trade options in a retail account is because of the natural leverage that's inherent in the product that you can't get in the equity space. But for me as a professional trader, I get access to almost unlimited leverage from the company. They'll give me as much capital access as I want to trade with. So my thought process has always been, why do I want to trade options which are less liquid and subject to time decayers or capital access when I already have as much capital access as I could ever want? So I don't trade options. So I hope that helps. I know that that's just like kind of a brief answer, because to really get into your answer in depth would probably be like a multiple hour response. The best thing you can do is check out my training program classes. So the folks at T3 Live can help you with that. Robert, this is what I learned from the VTF. Know when you should sit on your hands and not be aggressive. Today, I had 0 execution and more than 3 hours of education. I am pretty sure I learn more money today via education. Awesome, Robert. Robert here just started with us as Robert here is kind of one of the actual original subscribers to actually purchase a subscription here to the virtual trading floor back when we were first starting to kind of experiment with it, and I think it's helped him a lot. So I'm glad to have you on the team, Robert. From Dave W, I think is the next question I'm seeing here. Do you think the opening drive plays are more profitable or consistent versus inside and up on the 5? Well, I think that if you trade every inside 5-minute bar, that you will lose money in the long run. Again, inside candles are an execution strategy for when you like other things. So you have to have trend, you have to have momentum, you have to have other things, the market, the volume, and the stock on your side to actually take that. And sometimes an inside bar kind of can be an opening drive trade if it's still happening in like the first 10-15 minutes. But those main opening drive type trades, which is what I think you're really referencing, are more like those opening breakout plays, which that's one of my favorite trades. It's just that breakout that's happening in the first 5 minutes of the day. I love it because that's when the price discovery period is really happening. The market's a lot thinner, and you can get a really big reward for the risk that you're putting on. Truett asking, why did you pick that number? I'm not really sure what you're referring to. It might have been something I said earlier. MRIN is having to deal with Google. Kevin from Staten Island. I can see Staten Island out the window. I actually took the Staten Island ferry for the first time ever the other day. It was kind of a good time. It gets pretty close to Statue of Liberty. I don't know why you'd pay money to go on a boat to go past the Statue of Liberty when you could just hop on the Staten Island for free. Bought myself a little beer right here. Hopped on the Staten Island ferry. It was definitely a good time. QS. Your QS bid was 2251 with large size. Was it hidden? I was showing it. I was showing it on level 2. I was on ARCA. Just scrolling through the chat here, looking for the next question. Looks like it's from Aaron. I want to slowly have long swings in my P&L, but each time, call it bad market timing, the market says no. Disney case in point. I mean, that's just the news. Had a comfortable position and was grinding up and off a point increase. Then bam, the CEO speaks at a conference and the stock dives almost 4%. Any suggestions or advice? Yeah, so look, news, there's nothing you can do about news. Sometimes news is going to be with you. Sometimes news is going to be against you. If it comes out randomly and you're already in the position, it just kind of is what it is. There's nothing you can do about that. You just got to have your stop losses in place, and sometimes it'll be with you. It seems like, I know personally, it feels like it's against me more times than it's with me. It's like holding stock on earnings. In theory, it should be 50-50 on if my stock goes up or down on earnings. I swear I've got like a 10% success rate on holding stock in earnings. That 50-50 always, that coin always is landing on tails, man, every single time. Especially the earnings season before last. I think I held like 9 swings in the earnings. I think 8 of them went against me. It was sick. The biggest thing is when you're swing trading, you really want to do it from a win-win scenario. So, the whole idea behind keeping a position overnight is that you're adding extra risk. I don't want to be adding extra risk if the position is against me. If the position is against me and I'm keeping it overnight, I'm gambling. I want to be keeping positions overnight when I'm well in the money on it and the daily chart looks right. And that way, hopefully the worst case scenario, barring bad news overnight, I know some people probably got hurt yesterday with how big the market gap down was, but you want to try to put yourself in the situation where the worst case scenario when you are swinging something is that you lose nothing. And again, the whole market has a massive gap down like yesterday, or your stock has bad news overnight. That's the inherent additional risk in holding positions overnight. I'll never forget trading Qihu 360, symbol QIHU. It's delisted now. It went. I think it got privatized. It's a Chinese company. I'll never forget trading that stock, and it was trading it on news the first day, and I don't remember what the news was, but it had a 20% move, and I caught the entire move, and I crushed it. And I remember when the market closed, Man, I felt like king of the world that day. I freaking crushed it, and I was up so much money in it that, you know what, I kept a percentage of my position, because why wouldn't I keep a percentage of my position? Maybe this is just the start, right? That's exactly when we want to be putting our keeping positions overnight, is when we have that profit cushion. I crushed this so bad, why wouldn't I keep 20% of my position overnight when I'm already 20% of the money intraday? Well, that night in China, they announced an accounting scandal for the company, and the next day it gapped down like 20%. I think it gapped down like even slightly past my stop loss, even though I was 20% in the money. It got down some insane amount on this accounting scandal, and I got stopped out, obviously. And I was pretty unhappy about how much money I gave back on that 20%. It was bad news, you know. You just can't do anything about it, and I still made money on the trade because I positioned myself in a win-win situation. That's the biggest piece of advice I got for you, is when you're keeping stock overnight, you got to be in a win-win situation, and that just sucks that Disney happens to be the one that you're in. I'm really sorry. I feel bad for you on it. I've been there. I've been there many, many times, unfortunately. And I've been there on the opposite side also, you know, where I'm just sitting in a position like Fly. You guys remember Fly? Is Fly delisted now? Stefan got me in this Fly earlier this year. And he was saying, I think this company might get bought out, blah, 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 blah. And I had a big position at $10. It got bought out at 17. Walked in one day. It was like, boom, $17. See ya. I'm out. I'm done. Having a good day. It's delisted now. So it can happen both ways, but it definitely does seem like it tends to happen against you than with you, right? Good time to get into Root. Root's a momentum name, and I'm in it, but I probably shouldn't be. Root's a momentum name. I want to be in this when the volume's picking up, when the option flow's coming in. I want to buy this high to sell it higher. I don't want to buy dips. There's certain companies where you want to be thinking about being a dip buyer, like a Microsoft. And there's certain companies like these speculative momentum names that you don't. And this is one of them. Is the stock belong at $2? Is it belong at $20? I have no idea. But these things can rip. They can squeeze. You want to buy them high to sell higher. I don't think that, you know, I don't want to buy this stock at $5.50. I want to buy it at $6.50, which sounds crazy, right? And you're supposed to buy low and sell high as a trader. It depends on the stock. This type of name, I want to buy high to sell higher when I have confirmation. So I am not an advocate of buying Root here. Company bleeds money. Nice, yeah, Chinese New Year. Yeah, 9/11, they had to close down the market. I mean, yeah, for things like that. I think that there was also, there's been a couple occasions, right? 9/11, I think that there was a big hurricane at some point back in the day where they had to close the market for a period of time. I forget if it's Christmas Eve. There's 2 half days in the market. It's the day after Thanksgiving and it's another day. What would be more? PG, I'm not sure I understand your question. You talked about inside and higher, so I was talking about inside candles. We were talking about QS, I think, on the 5-minute chart. No, it wasn't QS, but QS has an inside 5 here as well. It was Lucid, LCID. This momentum inside 5 here. It's an execution candle. What would be more of your bullish candlestick? Bullish candlestick patterns. Yeah, so like the downside hammer capitulation buy setup is one of them. Ignition bars, which is a high volume breakout candle. That's another type of bullish candle. You know, generally any high volume positive Maribozu, which is a green Maribozu candlestick, is a bullish candle, and the market is innocent until proven guilty, as long as it's holding above the low of a positive Maribozu. Definitely check out my candlestick class for that. So I have a class that's over an hour, I think, on candlestic patterns. True here. What makes you pick what stocks to watch? Scan criteria, UOA. I'm not sure what UOA stands for. Relative volume, social media, etc. Sure. So it depends a little bit on the day. Certain days, a day like yesterday, as an example, I don't have to do as much individual stock research because the whole market's going to be in play. So I can trade the market. I can trade anything that's going to be correlated to the market. On other days like today, and a lot of the days this past summer, when things were tighter, trickier, there wasn't as strong of an advantage with the market, then I want to be focused on what we call stocks that are in play. Stocks that are in play are typically going to be stocks that have higher volume and or news. So a big part of my research is here in the ProDesk VTF. Reach out to the folks at T3 Live to become a subscriber. We tend to get the news in here pre-market pretty early. Guys, you can't be starting your trading day at 9:28. I really don't think you guys should even be starting your trading day at 8:58, just coming in for the morning meeting and totally piggybacking off of us. You got to be starting your own research earlier than that. We get the news, all the updated news, individual stock news here into the VTF that occurred from the previous day and occurred that morning into the VTF pretty early. Pat's usually posted news by 7 a.m. or so. He was posting it even earlier when he was remote, so hopefully we'll get Pat back remote at some point. I go through every single stock that gets mentioned in the VTF prior to 9 a.m. Every single one that all of you mentioned. I go through the charts of any name that we saw that Kathy bought or sold. I go through every stock that reported earnings, anything that had an upgrade or downgrade, anything that had new news. I scan all of those to combine a stock that has news with a potential daily chart setup. That's my ideal world. Like QS through 22. I wrote it down, but it was already gone. QS through 22. We see news hit. I see $22 is a nice looking initial level here. 23 is the second level, but at 22 it's not going to be extended at all. I'm like, oh man, if they buy this through 22 on volume today, this could be such a sick trade. That's what I'm really looking to combine. So news and volume is what I'm looking for. And also chart setups. You know, I pay attention to chart setups, but I prefer when there's news. No, Thomas, my classes are not on YouTube. I've been doing these mini classes. If you subscribe to Derrick the Trader on YouTube, I've been putting mini classes up there. But they're kind of, you'll get some good information from it that can start your brain process, but it's also just a little bit of a tease. I like to tease a little bit sometimes. The real meat, the real detail is in my training program that you can have access to. Just reading the commentary from AM Trader and Caroline and getting a giggle out of it. Not sure, Gabriel, which comment that was off of. My bid, yeah, at 22.51 in QS. It was I was displaying my size. QS is a thick enough stock that I felt I could show my size, but I didn't get filled any stock. Yeah, I'm experimenting with the TikTok thing also. I'm not sold on that. I like to have a good time. I'm not afraid to do a little dance or whatever nonsense stuff that they were asking me to do. But I'm not totally sold on the TikTok yet. Oh God, you guys are killing me. No problem there, Aaron. I'm a TikTok star. Oh my God, Jackie's showing up now. We got the whole team here. You love to see it. Do I use trailing stops on every order I enter as a rule? No, not necessarily. I only really implement trailing stops on with trend trades, not really on counter trend trades unless the counter trend trade becomes a reversal, in which case it is then with the trend. And again, I mentioned this in yesterday's afternoon meeting. Sometimes I bring on a new professional trader who is used to trading in a retail account at like a Thinkorswim or whatever, and I guess they have an order there that can do like an automated trailing stop, where it trails by a certain amount of cents or a certain percentage. I hate that. I would never want to use an automated trailing stop. I need to trail based on the chart. I have 3 rules for trailing. Check out Derrick the Trade. Did we get that class on there yet? 3 rules for trailing? Where's Dylan? I'm not sure yet. But anyway, I go into detail in the game planning class in my training program on the 3 rules for trailing. It is pivot point, ADMA catch-up or equilibrium catch-up is represented by the ADMA and new high. And then I can raise my stop to the last pivot. The memes are hitting now in the VTF. My candlestick class is also in the training program. What are the daily technicals I'm looking for early in the morning? Support, resistance, and chart patterns on daily charts are basically what I'm looking at. Derrick the Trader on YouTube. 220 subscribers. I love to see it. Look, they added a new one here today. Best time of the day to trade. Little mini lesson. I was wearing my Metallica t-shirt that day. Rock on. Love live shows. I don't tweet a watch list in the morning at this point, Truett, but maybe it's something we can think about for the future. Dylan says the trailing stop video is coming soon. All right. Looks like I got to the end of the VTF here, so it looks like I answered everybody's questions, and it's after 5 o'clock. It's 5:15, so let's wrap it up. Not a bad day today. Probably not a great day either, right? But there's definitely some opportunities to make a few bucks for yourself. And probably more importantly than anything, we did a good job of not hurting ourselves on a day that was a little bit trickier by having a good game plan. So, Brent, reach out to the folks at T3 Live, and they can help you with that. Anyway, we'll wrap it up there. You guys have a great night. I'll see you all tomorrow morning at 9 a.m. Try to be in here earlier than that, though. Be in here to do your own research, and then we'll do our morning meeting at 9. So I'll see everybody then. Have a great night.